Hello, hello, everybody. Hello, and welcome to my session. And today's session, we are talking about, welcome to my session. Let's talk about life. That's the name of the session. Let's talk about life. And that's life insurance, that is. Life insurance, that is. Now, today, y'all, we have a really, really good topic. We are actually discussing the difference between the two types of insurance, life insurance. And a lot of people really are confused. They really don't know what the difference is, which one they should choose, excuse me, for their families. So I'm going to break it all down for you guys today. So you'll know exactly what you need to do when it comes down to life insurance, what type of life insurance you need to choose that will be best for you and your family, okay? And I'm going to break it down so plain where even a kindergarten little child can understand, okay? So it's going to be broken down really, really, really simple so you guys can understand. Y'all, I'm sorry. I'm yeah, but anyway, it's a whole nother ball game what I'm about to say because I went through a lot trying to jump on this live today, and I tell you what, mm, Lord have mercy. But I'm here nevertheless, and that's all that matters. And like I said, today we are going to talk about the difference between the two types of life insurance because there's only two types. No matter what nobody tells you, there's only two types of life insurance. So, as you come on, please, ma'am, please, sir, please share the live. Now, today, not only are we on um, Facebook, on my business page on Facebook, Take It to the Table with Juanita, or on my personal page on Facebook. We are also on YouTube, and we are also on TikTok today. So welcome to all of my TikTok followers that are watching right now. Thank y'all for jumping on. And I was just telling them that we are talking about life. We're talking about life insurance, that is. And I'm going to break down for you the difference between the two types of life insurance, because a lot of people get so confused when it comes down to life insurance. So I'm going to break it down to you like it was you're in elementary school, so you can fully understand and know the difference between the two, so you'll know exactly what to select for you and your family. A lot of people get so confused when it comes down to life insurance. But the thing I must say, that everybody needs it. Everybody needs life insurance. I don't care if you're young or you're old. Everyone needs life insurance, because just as surely as you're living, you're going to die. I hate to be the bearer of bad news, but you're going to die one day. We know our birth dates, but none of us know our death date. So why play around with it? It's best to need it and not have it and not need it, than need it and not have it. You know, it's kind of funny how when somebody passes away, the first thing that you hear the family say, oh, or somebody say, oh, well, did they have life insurance? That should not be the first question that comes out of our mouth. We should all know that we need life insurance. That should not be the question. Should be, has someone contacted the life insurance agent yet? Has someone filed the claim yet? That should be the question. Has someone filed the claim yet? The life insurance claim. But I'm going to break everything down for you so you'll know, like I said, what type of life insurance you need to choose. Now, those of you over here on TikTok, please, y'all, subscribe. On YouTube, subscribe. On Facebook, y'all click the like button, comment. I want y'all to comment. If y'all have any questions about anything that we go over, just any questions in general, I want you guys to go ahead and ask me as we go through this live, okay? Now, let's get right into it, y'all. I'm trying to log on to my other device. I was having trouble trying to log on here. I don't know. Uh-oh, well, wait a minute. Let's turn this down. I'm sorry, guys. Okay. I was having trouble trying to log on. Now I'm trying to turn the volume down. Let's click out of it. Let's go out of it. Okay. Oh, technical difficulties, y'all. I'm sorry. Let's see here. Let's see if we can turn the volume down. Is that how to turn the volume down? Yeah, I got so many devices going here. I'm sorry. Let's see here. Let's see if we can turn. Okay, there you go. I got it turned down. So and the only reason why I'm doing this, because I want to see, as y'all come on, I want to see your comment, especially this is Facebook. I have Facebook on this device here, so I can see as you come on and comment. I don't want to miss no comments. I don't want to miss no questions. So if you have any questions, you have any comments, you have any concerns as we go along with this, I want you to feel free to ask. Don't hesitate to ask, okay? So let's get right into it. Now, with term life insurance, term coverage is more like a fixed period type of coverage. And before we get started, no matter what nobody tells you, it's only two types of life insurance. You have only two types. Now, there are so many different names for it. You have like with your whole life, we call it whole life, but it's cash value. With your cash value insurance, they have so many names for it. They call it universal life. They call it flexible premium life. They call it paid up life. It's just so many senior life, final expense insurance. You have Gerber life. All of those are what we call cash value insurance. And I'm going to explain to you what cash value insurance is a little further on, okay? But now we are talking about term insurance. Term insurance is coverage with, they have fixed periods, what they call fixed periods. So you can get term insurance for like a 10-year policy, you can get a 20-year policy, you get a 30-year policy, you can get a 35-year policy. You can get however many years that you want, and I think it's up to 35 years with a term policy. Now, well, I know that that's what it is with the company that I work with. You can get up to 35 years on a term policy. Now, with a term policy, it provides financial protection if you die during the term. During the term, if you die during the term, it provides financial protection for you. Yeah, and I'm looking back and forth because I have YouTube and Facebook over here, and then I have TikTok over here. So y'all bear with me with this, okay? Now, so the cost is typically cheaper than whole life. So when you get term life insurance, the cost is cheaper. And I'm going to explain to you a little later on when I start breaking down whole life, the reason why the cost is cheaper for term life than it is for whole life insurance. Okay. Now, the payout, it pays a death benefit only if you die during the term. It pays you a death benefit. Okay. Now, you don't have what they call a cash value build up in your so-called savings. And I'm going to explain that to you when I start talking about whole life. You'll understand what I'm talking about when I say your so-called savings. Okay. A lot of people don't know this because a lot of insurance agents, they don't break this stuff down for you, because if they do, 9 times out of 10, you probably won't even buy the policy. If they break everything down to you and explain to you exactly how it works, 9 times out of 10, you probably won't buy some policies. So I'm going to break it down to you so you can understand clearly. So when the next person comes to you, you'll know exactly what you're getting. You know exactly what you're buying. Let me turn my Bluetooth off here. I forgot. Y'all, I'm sorry. Let me turn off my Bluetooth. I had to take my Bluetooth off. I forgot I had my Bluetooth in. Anyway, back to what I was saying. So with the term, it does not have a cash value build up, which what they call the savings account. They don't have that attached to it. And really, that is the reason why the insurance is so much cheaper, because you're not putting that extra money in that so-called savings account. Okay. And I'm going to explain to you what that savings account is and how that savings account works. And you probably don't want to call it a savings account after I explain to you what it is and how it works. Okay. Now, with whole life, this is how whole life insurance works. Whole life is insurance that I'll say about 80% of people have. I know in our community, about 80% of people have whole life insurance. And with whole life insurance, I remember back growing up when the insurance guy would come knocking on the door on Saturday mornings to collect the premium for payment for my mom. I remember that. I remember that like it was yesterday. He would come on Saturday mornings and collect premiums for my mom's whole life policy. And I'm going to share with you a little story on why I got involved with insurance. And you will see that, yeah, I really had to find out what this whole insurance thing was about, because if they had all these policies, my mom and dad, but then we still had to end up paying out of pocket, I didn't understand that. So I wanted to find out a little more information about life insurance. But I'm gonna share that story with you a little later. Okay, so with coverage, it's supposed to be on some of them, supposed to be for a lifetime. Now, a lifetime could be as long as you live,
A lifetime for some policies could mean 70 years. Well, when you turn the age of 70, put it like that. When you turn the age of 70, because insurance company are looking at it like this. By the time you turn age 70, you should have enough money accumulated somewhere where you won't need life insurance, or you should be dead. That's just how they think. They think by the time you get age 70, you should either be dead or you should have enough money accumulated after all of those years to whereas if something was to happen, you had enough money for your final expenses, and if you want to leave money behind for your family. That's how they're thinking with that, okay? And you do have some insurance companies that will allow you to go past the age of 70. But this is the thing, you guys. Y'all watch out for those companies that will allow you to go past age 70. And the reason why I say that, because they only will give you a little bit of insurance for a whole lot of money. So 9 times out of 10, it may not even be worth it. It may not be worth it. Because if you're only getting, say, $5,000, but some of them probably ain't that much, about $2,000, and you're paying $300-$400 for $2,000, like, come on, y'all. Yeah, so you have to be mindful of that. Be mindful of the ones that will allow you to get insurance after you're age 70. Because 9 times out of 10, they're not going to give you a whole lot of insurance. You're going to pay a whole lot of money for a little bit of insurance. Okay. Now, the purpose for the whole life, it provides a death benefit, and it also builds up what they call a cash value over time. Now, let me explain to you. This is the one they call the savings account, y'all. This is what they call the savings account. Okay. Now, with this so-called savings account, you have to be mindful. The savings account basically is you paying extra for the insurance. That's why they say term insurance is always cheaper, because you're only paying for insurance. You're not paying for all the extras. Now, with the whole life cash value insurance, you're paying that extra because they're taking half of your premium and they're putting it into a savings account. A so-called savings account. And so now that's where your buildup comes from. Your cash buildup comes from, because that money, you have to put that money there. Insurance companies are not giving out any free money, y'all. Hear me loud and clear. Insurance companies are not giving out any free money. So in order for you to have money accumulated or build up in that cash value account, you got to put that money there. And then they call it a savings account. They call it a cash value savings account. Where you can take money out of your savings account anytime you want to. Let's break this down. So you guys can understand what's really happening here, okay? So let's just say that you took out a $75,000 policy, paying $70 a month. $70 a month. So each month when you make your premium payment, what they're doing, because remember I said you got to put that money there. You got to put that money in your cash value for it to build up. So what they're doing, they're charging you extra, like double, sometimes triple more than what you can get a term policy for, because now they have to make money accumulate in your cash value, your so-called savings account. So they make you pay $70 a month for the $75,000 policy. And so now what they're doing, they're going to split that payment in half. And once they split that payment in half, they're going to take $35 of that $70, and they'll probably pay for your $70,000 policy. That other 35, they're going to take it and put it in that so-called savings account. The so-called savings account. So let's just say you took this policy out, and let's say you had it for about 10 years. You had it for about 10 years. And so after about 10 years, you decided, okay, I want to go and I'm going to purchase me a new car. I want me a new car. And I'm going to go and take $5,000 out of my savings account, so-called savings account. I'm going to take $5,000 out of my cash value savings account, because that's how they sell it to you. They tell you it's a savings. You can borrow your money anytime you want to. Listen, guys, listen at what I just said. It's a savings account, but you can borrow your money anytime you want to. That's like you going to the bank. Put in your savings account at the bank. You're going there and you're putting faithfully, you're going there every month and putting $20 in your savings account at the bank. And so after about 2 years, you decided, oh, you know what? I want to go and I want to take some of my money out of my savings account because I want to buy me a new car. I want to get a down payment on a new car. So you go and you ask them for money out of your savings account at the bank. And they tell you, oh, Miss Client, yeah, you can get, say you want $300. Yeah, you can get $300 out of your savings account, but it's a loan and you have to pay it back with interest. How many of you in the comment section, how many of you will continue to bank with that bank? Tell me in the comment section, yes or no. Would you continue to bank with that bank if the money that you have been saving up for 2 years, you go back to the bank and you ask them, okay, give me $200 out my savings account. And they tell you, yeah, you can get it, but it's a loan and you got to pay it back with interest. Would you continue to bank there? Come on, TikTok. I want to see, would y'all continue to bank there? Facebook, would y'all continue to bank there? If they told you YouTube, would y'all continue to bank there? If they told you the money that you have been saving up for 2 years, you can get it, but it's a loan and you got to pay it back with interest. You wouldn't bank with that bank anymore. That would be the last day you would bank with that bank. And that's how it works, you guys. That's how this so-called savings account works. They make you borrow your money. And if you don't believe me, if you got a whole life policy, I want you to go right now and I want you to look at your whole life policy. You look in the front part of it, and it would clearly tell you that if you decided that after you get a build up, and that's a whole nother story. I'm going to explain that in a few minutes too, because you don't get a build up like immediately, like once you start paying on your policy, that the money builds up. It takes 3 to 5 years, 3 to 5 years. So guess what? 3 to 5 years. So where's that money going? The extra money, where's that going? If it takes 3 to 5 years before it builds up and accumulate in your bank account, who's getting that money? Who's getting that money? Who's getting the extra money that you're putting in there to go in your savings account? Who you think getting the money? Who you think's getting the money? Exactly, the agent. The agent's getting the money. So when you put that money there, like I said, it's going to have to accumulate. And once it accumulates, then you can start taking money out. And it takes 3 to 5 years before you even see anything in that savings account. And like I said, go check your policies. If you have a whole life policy, go check it so you can see it would tell you clearly that if you decided that you wanted to take money out of your so-called cash value savings account, that you have accumulated over the years, then now you have to borrow it. They're going to loan you. They will loan you your money. They're going to loan you your money. Your money that you put there, they say, yeah, you can get it, but we're going to loan it to you. So once you make that premium and they take that money and they put it over there in that savings account, guess what? Now it's their money. They treat it like it's their money. And if you want it, now you got to buy it. And not just that, guess what? Now you got to buy it with interest. Now you got to buy it and pay it back with interest. And the interest is a high interest rate. It will clearly tell you in your policy how much that interest rate is. You would have to pay that money back with interest. Now, guess what? Let me finish up and explain to you how this cash value savings account works. So let's just say that you had the policy, like I said, and you wanted to get it out. They tell you got to buy it. Okay. That was number one. Okay. Let's say you had the policy, say you had it for about 20 years. And you decided that you wanted to go and you wanted to take all of your money out because you needed to pay a down payment on a new home. You want to pay a down payment on a new home. So you needed all your money. You want all your money so you can go put a down payment on your home. So they send you all of your money out of your savings account. Okay, so this is the thing. Once you take all of your money out of your savings account, it cancels your policy. It cancels your policy immediately. If you take all your money out, it's going to immediately cancel your policy. It's going to immediately cancel your policy if you decide to take all of it out. Yes. But it's your money. Why are they penalizing your family for that? Oh, they're penalizing you because really you're still here. Now you end up with no insurance. But didn't you pay for both? Did every year when you made your premium payment for your life insurance, remember you paid $70. They split that payment in half. Each month when you made your payment, they split that payment in half, and half paid for your policy and half went into the savings account. And now you decided that you needed your money out your savings account. They're going to cancel your policy. But didn't you pay for both? Weren't you paying for both? That is how cash value, whole life, that's how it works. Universal life, that's how it works. Flexible premium life, that's how it works. Senior life, that's how it works. Gerber life, that's how it works. That's how it works. If it's not a term policy, this is how it works. We only have two types of insurance. Remember, I said that from the beginning. So if you don't have a term life insurance policy, this is how it works. They can call it whatever they want to call it. But if it's not a term policy, this is how it works. A lot of people don't know that. A lot of people don't realize that. A lot of people don't even read their policies to really know that. And guess what the agent is not going to do? The agent is not going to tell you that because they're going to sell it to you like, okay, you have a savings account and you can borrow your money anytime you want to. And you know, with us, we hear borrow. Oh, yeah, I got a policy. I can borrow anytime I want. Why do you have to borrow your own money? Why would you want to borrow your own money? Why? Why put your money in an account that whenever you need it, they're going to take and tell you you can have it, but then you got to pay it back with interest because it's a loan. you might as well put it in a savings account, right? At least if you need it, you can get it anytime you want, and you're not penalized for getting it. Okay, last thing, how the whole life insurance work, cash value. Let's say you took the policy out and you had the policy 20 years and you have a cash value build up in there. Say you got about $10,000 accumulated. You got about 10,000 accumulated in your cash value. Yeah, that's exaggerating, but you got about $10,000 in your cash value. And let's just say you never touched the money. You never went and asked them for a loan. And a lot of people think this is good. Oh, no, I ain't never touched my money. You're gonna wish you had. But listen, let's say you never, ever, ever went in and borrowed any money from your policy. Okay. And you die. You die. And now not only do you have the $75,000 the coverage, the benefit, but you also have your, say, $10,000 that you have accumulated in your cash value account. And you die. So now, guess what? Your family, they're going to get the $75,000 because they're obligated to pay your family that $75,000. What they're not obligated to do is to pay your family that $10,000 extra that you saved up, your hard-earned money you saved up 20, 30 years. They're not obligated to give that back at all. So they keep it. They pay your family $75,000, but they're going to keep the 10 that you put in that savings account that accumulated over the years. That's not right. You had your family members save up over 20, 30 years, their hard-earned money they put in the so-called savings account, thinking that they were doing a good thing. A good thing. They were going to leave a lump sum behind for their family. But then the insurance company keep that. They pay them the $75,000, the policy, but they kept the $10,000. How many of us have family members that have left the insurance paid the insurance company on the back end $10,000 and not even know it, not even realize it? I'm pretty sure a lot of our parents, a lot of our grandparents, our great-great-grandparents, because they thought they were doing a good thing by letting that money sit there and accumulate, thinking that even after they're gone, at least they're going to pass that money on to the family. That's not how this works. They're only obligated, and they're not going to pay your family that. That's how the policy works. They're not going to pay it. They're only going to give them whatever the coverage was. $75,000, that's what your family get. And Lord forbid, if you took a loan out and you didn't pay it back. So now, let's say you took it out and you lived, say, 10 years after that. Now your interest rate has accumulated over the years. So when your family member dies, instead of them getting $75,000, the insurance company don't get what you owe them first, and then they pay them what's left over. So if they had a loan and didn't pay it back, then guess what? They're going to take that out with interest, and then they're going to pay your family what's left. That's how it works. That's how it works. A lot of people don't know that, but that's how it works. That's exactly how it works. So I'm here to just share with you. And y'all, let me tell you the reason why I got involved with this little short story. The reason why I got involved with insurance, and some of you probably heard it before, but my mom and my dad, you know, they had policies faithfully. My mom didn't mess around when it came down to life insurance. She had several policies. My dad had several policies. She made sure that they had several policies. But the thing is, they really didn't know what they had. And that's why I said I got into this business, because when my dad died first, my dad died, and he was the breadwinner of the family. He was the breadwinner of the family. And after he died, my mom had like, he had like what, I think four insurance policies on him. She had four insurance policies on him. But y'all, with those four insurance policies, it only paid out about $2,000-$3,000 with four policies. And so we still had to gather together at the kitchen table, have the conversation, who's going to help pay what, because we had to come up with the rest of the money to pay for his final expenses. So after he died, we thought, okay, mama learned from that. So mama good now. Not realizing that my dad was the breadwinner of the family. He was the breadwinner. So now that whole income was gone. It was gone. So here my mom was with all of these kids. It was 9 head of us, all of these kids, but she only had her one little income. Remember, he was the breadwinner. So he paid the majority of the bills. And so she got these kids she got to take care of. She got these kids that she got to feed. She got these kids who got to have school clothes. She got these kids who got school fees. She got these kids that want to possibly go off to school, college. She got these kids that she got to pay for. She got light bill, she got water bill, she got car notes, she got all of these bills. But now she only have one income. And so what she did, the insurance company, when they sold her the policy, remember they told her, oh, you got a cash value over here. You can borrow money anytime you want to. But they failed to tell her that once you start getting into that borrowing, and if you take all of the money out of your cash value, your policy will cancel. They failed to tell her that. So she thinking that she can dibble and dabble and just take money out each month as she needed it, just to survive. And eventually, apparently she took all the money out of, she had 3 policies. She took all the money out of all 3 policies, her cash value policies. And her policies canceled. And I'm pretty sure she probably knew that, because I'm pretty sure the insurance companies sent her a letter telling her that that they were going to cancel if she didn't put money back in. But she didn't have the money to put back in. She was barely making it. She was getting the money to survive, to pay what she had to pay monthly. So how does she have all these hundreds of dollars to put back in to the policy to keep the policy going? She didn't have that type of money. So she allowed the policies to cancel. But guess what? The kids didn't know that. We didn't know that. We didn't know that until she died. And so when we called the insurance company, because we were thinking, oh, mama knew, she learned from, when daddy died, and I know she left us some money, because we thought daddy left us some money too. We didn't know that we had to kind of scramble up and get money to help lay him to rest. We thought he had these 4 policies, and we got all the 9 kids, we were good. But it wasn't like that. And so when mama died, we thought, okay, she learned from that. So it's no way that we're gonna have to come out of our pocket with nothing. We trying to see what we're gonna get. They left us something. So when we called the insurance company, she had zero. It was nothing. We had no policies. The policies canceled because she started dibbling and dabbling into that cash value and eventually took all the money out and it canceled the policies. So we had no policies. We had no money they left behind for us. We had nothing. We had to come together again around the kitchen table, have that conversation, and see who was going to pay what. Y'all, that is devastating for any family. Devastating for any family. When I say devastating, that's devastating for any family. So we had to literally come up with money to lay her to rest. We had no policies. It was nothing there. Nothing there. So that's when I had to find that. I'm like, you know what? It's no way that my mama had 4 policies on my daddy. She had 3 policies on herself, and we still had to end up paying for funerals. I was like, oh no, I have to find out more information about this insurance thing because something ain't right. Something just ain't right. And so that's when I found out that they just had the wrong type of policies. They just had the wrong type of policies. That's why I got into the insurance business. Because my whole mission and my whole goal is to go out on a crusade. And I'm going to educate any and everybody that will listen. I'm going to tell you everything that I know and I need to share with the public about how these insurance companies work. I've been doing this now for I had my license for 15 years, going on 16 years. And so my whole mission is to educate people so you won't be in the same boat like my family. Because when I tell you these GoFundMes, oh my gosh, GoFundMes are not insurance policies. I don't know where they came up with this concept about putting up a GoFundMe to help people. Think about this, y'all. Think about this. You have people that do the right thing and they take their part of their money, that their income that they make each month, and they invest it in them a policy. They sacrifice and they invest in a policy. So if something was to happen, the embarrassment won't be on the family, where the family have to scramble up money to pay for a funeral. But then you have those who want to party and do whatever and just, just splurge. And they don't want to invest in a policy. But soon as something happens, soon as their loved one dies, then they're looking at you to come up with, and they don't come asking for a couple of hundreds. They come asking for a couple of thousands. But they want you, and even if they ask for a couple of hundreds, that's still too much. How am I going to just give you a couple of hundreds or a couple of thousands of my hard-earned money to help you lay your loved one to rest when you had the same opportunity as I did to sacrifice and make sure that you had some proper coverage in place? So if something was to happen, and this is the kicker, this is the thing. Not only are you just investing and making sure you have money to lay them to rest, you can make it where this could be a way for you to really get out of poverty. Because a lot of times when you invest in insurance, you don't invest in just a little bit where you just have enough. And especially if you have a family, if you have kids, you have a husband, you want to make sure that whenever you leave here, you want to make sure that they continue to live the same lifestyle that they lived when you was on this earth. You don't want them to have to struggle. You don't want them to have to move from house to house. You don't want them to have to rob Peter to pay Paul. You don't want them to have to do that. You want them to live comfortably. And if not just comfortably, you want them to live better than what they were living when you was on this earth. There are so many families that are split apart after a loved one, a husband or a wife died, because the other one is not making enough money in order to carry on with the bills. Don't let that be you. Don't let that be your family. Don't let that be your kids. At least think that much of your kids, where you want to make sure that your kids are okay. If something was to happen, y'all, there are so many kids that are put in foster homes after the one parent dies because the other parent can't afford to take care of them. So now they're from pillar to post, from house to house. Don't let that be your kids. You don't want that to be your kids. So you can spend a little now, or you can pay a whole lot later. The choice is really yours. And life insurance is not as expensive as people think. I truly don't understand that. Life insurance is not that expensive. Now, just because you went one place and they quoted you a high price, that don't mean that all insurance companies going to quote you that same price or around that same price. You have to shop around and see what's best for you. And this is the other thing. Don't wait until you get sick and try to get insurance. If you wait till you need it to get it, you waited too late. You get the best prices when you're healthy. Insurance companies are not investing a whole lot into people that are not healthy because they know you're going to go any day. The best time to get it is when you're healthy, or as healthy as you can be. Don't wait until you're on your dying bed, because I promise you, is no insurance company that's going to take you up on that. If you are on your dying bed where you're about out of here, they're not going to invest in that with you. That's a loss for them if they do. They're trying to get ahead. So you have to invest while you are up and healthy, or as healthy as you can be. So don't wait. And the earlier you get it, the cheaper it could be. So if you wait, a lot of insurance companies, they stop at age 70 with insuring people. So if you wait till you 66 and 67, you almost, they think out of here. You're going to have to really be in some good shape to get a good price from any insurance company. So don't mess around and wait till the last minute, y'all. That's what I'm trying to tell you. Everybody needs it. Everybody needs it. Now, the only time you don't need it, if you're a wealthy person. If you're a wealthy person and you got enough money set aside or put away somewhere where if something was to happen to you, your family can say, oh, but she got this lump sum here. We can take this money and we can lay her to rest. Or if you got a family with kids and wife and a husband or any of that kind of stuff going on, and you got a nice little lump sum put away, and I'm not talking about $200,000, y'all, 200, 300,000, y'all, just let me help you make sure that your family is properly protected. Imagine how fast some people only take out policies that are $10,000, $30,000, $50,000, $20,000. If something was to happen to you, and let's say you got a whole family, wife and kids, husband and kids, how long you think they're going to be able to make it off of $50,000? Now, don't forget they got to pay for the funeral too. The funeral going to be about $10,000, so that's $10,000 going already. So now you and the kids are left with $40,000. How long do you think you're going to be able to make it off of $40,000, especially if you got a mortgage or if you got rent? Some people got rent now, rent just almost as much as a mortgage payment. How long do you think that's going to last? So allow me to help you. Allow me to show you. Allow me to sit down with you one-on-one and at least show you what will be sufficient enough for you and your family. So if something was to happen to you or one of your loved ones, that y'all will be able to carry on. you'll be able to carry on, and you'll be able to carry on comfortably without any hiccups. So bless you. So that's what I want to help you guys with. I want to help you with that. So I want you guys, if you want a free quote, I would be more than happy to give you a free quote. I would love to sit down with, because I've explained to you just now how insurance works. And it's up to you to choose which one you feel will be best for you. But I would love to give you a free quote so you can see that insurance is not as expensive as you think it is. But you'll never know until you get a quote. You'll never know until you ask. So you have to, and guess what? Just by you not asking or you not finding out, the issue is not going to go away. You're just making the issue worse. Because now, eventually, you're going to die, or your loved one's going to die, and you're going to eventually need some type of protection in order to pay for final expenses, and not just pay for final expenses, but to carry on. If it's a spouse of yours, you're going to need to carry on. So I would love to give you a free quote. If you inbox me, I would love to give you a free quote. I would love y'all. And guess what? We're always looking for people to come in business with us. I got into this business because I wanted to educate my family. I wanted to educate them so we can know what to do and how to do it, so we wouldn't be caught up again with a loved one dying and then there's no money there, and everybody got to come together and try to get up $10,000 in less than 7 days, or $5,000. They'll take a down payment in less than 7 days. So we're always looking for agents to come join us in business. And not only are you just educating your family, your community, your church members, your co-workers, not only are you educating them, but you're making money doing it. And when I say the money that you can make doing this is really, really good. The money that we can make doing one piece of business, some people don't make that in a whole week. We can do that in less than an hour. So if you're interested, inbox me. I will love to sit down with you and bring you on our team. And I would teach you and train you everything that I know, so you can be good at what you do, because you want to go out and you want to educate the public. That's the only way that we're going to get out of this poverty, y'all. Y'all, when you know better, you do better. When you know better, you do better. So inbox me if you're interested. I will love. And I have I know on Facebook here, I have somebody on that she probably sent you a message if you're on, asking you for, well, thanking you first of all for getting on. Toya, I don't know, can you jump on TikTok for me? We have a lot of people on TikTok. Yeah, but I'll be more than happy to sit down with you. I'll be more than happy if you want to come on board with us so you can learn everything you need to know about building generational wealth, everything you need to know about making sure that your family is properly protected, and not just learning, but also making sure, well, earning income too while you're doing that. I would love to sit down with you. Now, with all of that being said, now I am going to shout out. I'm trying to shout out my sponsors. If you want to be a sponsor, you guys, if you want to be a sponsor of this show, it's very, 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 very inexpensive to be a sponsor. I'm telling you, when I tell you that it's very, very, very inexpensive, it's very inexpensive. You're not going to pay more than $20 for me to advertise your business. Advertise your business, advertise your event that you have coming up. And if you want to be a sponsor, yeah, just shoot me a message, send me a message, and I'll be more than happy to talk with you and tell you how you can be a sponsor. And let's see here. We have our 2 sponsors we're going to shout out today. Now, for those of you that are looking for a DJ for your special event, there's no DJ better than DJ Q on the ones and two. He caters to the young and the old. He has a state-of-art equipment and can turn any event into a party of a lifetime. He has DJed for schools, for school proms, school dances, school sporting events. He DJed for weddings, receptions, church event, corporate events, private events, brunch parties, community events. Yeah, I'm gonna tell you, we went to a wedding this weekend, and when I tell you that DJ Q, he showed out, him and his hype man, Ricky Rose. Y'all, they showed out at that wedding, well, at the reception. But he played for the wedding too, but the reception, when I tell you that the people were on the floor and they didn't get off the floor, the whole entire reception. And then this was the thing that I really like about it. It was music for young, old, and then the bride and the groom. The bride, I think she was Latino. So he even had Latino music too playing. I'm like, y'all, he did his thing. He did his thing at that wedding reception over the weekend. So I suggest that if you're looking for a DJ, you can contact DJ Q. You can book him on Facebook at DJ Q at Original, ORRIGINAL, Original Sounds Entertainment. That's DJ Q at Original Sounds Entertainment. You can find him on Facebook. Now, we also have another sponsor, Lavish Cocktails by Toya, and she's a mobile bartending service. She does wedding receptions, private events, birthday parties, date nights, and more. So you can book her by calling 864 area code 523-2065. And Latoya, y'all, for those of you in South Carolina, she's even bartending at the Clemson games. So you at their home games, you might see Latoya out there doing her thing at some of the Clemson home games, because she's out there sometimes bartending at the Clemson home games. Y'all, she have her own drink that she's put together, little fruity drinks. You can purchase those too, but you can go to her Facebook page, Latoya Orr at Lavish Cocktails by Toya. Lavish Cocktails by Toya. Okay. Again, her number is 864-523-2065. Latoya Orr, and it's her mobile bartending service. So she'll actually come to you. She comes to you. And that's all I have, y'all. Contact me if you would like to be a sponsor. Contact me if you would like to join me in doing what I do. So you can go out and you can be a blessing to your community. You can be a blessing to your family. You can be a blessing to your friends by giving them the knowledge that they need in order. Now, this is the thing with what I do. We don't just do life insurance. We don't just do life insurance. We have people with investing in mutual funds, in annuities. We help them with their 401k retirement plan. We don't just do life insurance, okay? So we have people with building generational wealth. That's what we do. So if you want me to train you so you can do what I do, then please contact me. Okay, that is all I have for today. I thank y'all for jumping on. I really appreciate it. And I do these lives on Tuesday and Thursdays at 5. We call them live at 5. We do them on Tuesday and Thursday at 5. So those of you over on TikTok, y'all go ahead and is it subscribe or whatever you got to do so you don't miss out on any more of the lives, okay? Because I promise you, I'm dropping gems. I'm giving you all the little ins and outs that you need to know when it comes down to knowing what you need to know about life insurance. So you can go ahead and you can make the best decision for you and your family, because everybody needs it. It's not just for some, it's for everybody. Just as sure as you're living, you're going to die. Life insurance isn't just another bill, it's a gift of security, especially for your kids and your spouse. Don't wait until later becomes too late. So thank y'all for hanging out with me today. If this was helpful, I want y'all to share the live. If it was helpful, please share the live. This is information that a lot of people, no, everybody needs to know. Not a lot of people, but everybody. So please share the live. Please share the live. Thank y'all, and I will see y'all on Thursday at live at 5, live at 5 on Thursday for some more tips on things you need to know when it comes to life insurance. Okay. Thank y'all. And y'all have a good one.